Hey everyone, welcome back to the channel. Today we're diving into something that has Wall Street analysts buzzing: silver. What's driving its rally? What risks are looming? And what could happen tomorrow? If you're invested in precious metals or just curious about markets, this is going to matter. Everything I share is based on real, current, credible data and commentary. No hype, just what the experts on Wall Street are saying. Let's get into it. What's happening right now? The current picture. Silver at multi-year highs. Silver has recently surged to levels not seen since 2011, approaching US $43 to $44 per ounce. This rise is being driven by a combination of factors: industrial demand, specifically for solar panels, electronics, safe haven buying, weaker US dollar, and expectations that the Fed might become more dovish, i.e., lower interest rates in the future. Supply-demand fundamentals. Analysts see a persistent supply deficit of silver, more demand than supply. For example, HSBC estimates a supply deficit of about 206 million ounces in 2025 compared to 167 million in 2024. Industrial demand has been strong, especially for solar, photovoltaic, and electronics sectors. While some demand might dip short-term, expectations are that industrial offtake will recover strongly. Relative valuation versus gold. Silver is commonly considered undervalued relative to gold right now. One key metric is the gold-to-silver ratio, which measures how many ounces of silver it takes to equal 1 ounce of gold in price. Historically, that ratio is much lower than current levels, and many think the gap suggests silver has upside if the ratio reverts toward mean historical levels. Wall Street forecasts. Deutsche Bank raised its silver forecast to US $45 per ounce for 2026, up from previous lower estimates. HSBC also raised its silver forecast for 2025 to 2027, citing strong gold, safe haven demand, geopolitical risks, and the supply deficit. Some analysts are more cautious, noting possible negative influences like industrial demand weakness or a hawkish Fed. The risks and what could hold silver back. Before getting too bullish, Wall Street highlights several risks that could pull silver back. Federal Reserve/central bank policy. If interest rates stay higher for longer, that tends to hurt precious metals, including silver. Higher rates increase opportunity cost of holding non-yielding assets. If inflation fighting becomes priority over growth, silver might suffer. Industrial demand fluctuations. While industrial use is supporting demand, any slowdown in manufacturing and electronics or in solar panel installations, for instance, due to supply chain problems or cost pressures, could reduce demand. Dollar strength and macroeconomic shocks. If the US dollar strengthens unexpectedly, example due to risk-off moves, strong US GDP, or safe haven demand, silver prices could get pressured down. A strong USD makes silver more expensive for holders of other currencies. Profit-taking or technical resistance. Given recent sharp gains, there may be resistance zones around the current highs. Some investors may choose to take profits, which could generate short-term pullbacks. Policy/regulatory risks. Trade tensions, environmental policy changes, especially for industries that use silver, solar, electronics, or mining constraints, either labor, regulations, or costs, could impact supply or demand unfavorably. Also, inflation or tax policy changes may affect cost structures. While not all analysts are focused on this, it's a consistent risk theme.
What could happen tomorrow? Short-term scenarios. Here, we consider what might unfold in the immediate future, the next trading day or two, based on expected catalysts. Scenario. Catalyst. Likely outcome for silver price. Bullish breakout. Strong inflation data above expectations, e.g. US CPI or PCE, fuels fears of price erosion, strengthens narrative for precious metals. Dovish Fed hints, weaker USD. Silver could push above $44.20 to $44.50 per ounce, possibly retesting resistance zones near $45. If momentum builds, could aim for $48 to $50 in short order. Technicals suggest breakout if resistance is cleared. Pullback or correction. Inflation data cooler than expected, Fed puts up a hawkish tone, unexpected strength in the USD, weak industrial data. Silver might correct downward, perhaps toward $40 to $42 region. Support levels are likely around those points. Volatility is possible. Investors might take profits. Sideways or consolidation. Data mixed or muted, global economic uncertainty without strong positive or negative surprises, range-bound trading. Silver may stay within a band, e.g. $42 to $45, consolidating around current highs until clearer signals emerge. Fed comments, macroeconomic data, etc. Wall Street's longer-term views and strategic insights. Beyond tomorrow, here are what many Wall Street and metals analysts believe over medium-term, months to 1 to 2 years. Silver to outperform in certain scenarios. If the supply deficit widens, industrial demand continues, especially solar, EVs, electronics, and central banks remain or become more dovish, silver could see 15 to 20% plus gains over 12 to 24 months. Targets in 2026. Deutsche Bank's forecast of approximately $45 per ounce. Some bullish estimates push higher, especially if gold continues strong. Valuation compression versus gold. Many expect the gold-silver ratio to narrow, meaning silver should gain relative to gold if current inequalities are undone. This could happen if silver demand and interest pick up. What to watch and what investors should do. For those following or invested in silver, here are key things to monitor plus strategic tips. Things to watch. Upcoming inflation data, CPI, PCE in the US. Federal Reserve statements, minutes, especially about interest rate paths and policy risks. USD index strength or weakness. Industrial data, manufacturing output, electronics demand, solar industry reports. Geopolitical tensions, supply disruptions in mining, trade policy developments. Possible investor actions or strategies, not financial advice. If bullish, consider layering into positions, averaging in, rather than betting everything at once, especially given volatility. Some exposure in silver ETFs or physical silver could balance off risk. Use stop-loss or risk management parameters. Know what price levels, if broken, suggest a reversal. Diversify. Silver is volatile, it may be less stable than gold. Consider how silver fits into overall portfolio risk. What's the takeaway? Here's how I see it. Silver is in a strong position. The fundamentals are supportive. Supply deficits, industrial demand, gold's rally helping silver's narrative, and expectations of Fed easing down the road. But it's not without risk. Rate policy, dollar moves, and profit-taking could bring pullbacks. Tomorrow might bring a big move, likely up if inflation surprises, or down if the data points the other way. After that, over the next months, silver could outperform, especially if the world's clean energy, solar, and safe haven demand remain active. Stay alert. Watch the key indicators and position carefully. If silver breaks resistance cleanly, we might be in the early stages of a strong uptrend. If it fails, the correction could be sharp.